BHP Group is an Australian-based multinational resource company with over a century of operating history and global operations. As a multinational firm, BHP earns most of its revenue in US dollars while incurring sustainable costs in local currencies, particularly the Australian dollar. This exposes the company to significant exchange rate risk, which can directly affect cash flows and profitability. Therefore, ethical and responsible financial management is critical, requiring transparent reporting, conservative forecasting, and strong governance to protect stakeholders' interests.
Next, I will discuss forecasting exchange rate and its importance to BHP. BHP operates globally but reports its financial results in US dollar, while many of its major operating costs such as wages, suppliers, energy and are accrued in Australian dollar, Chilean peso, Canadian dollar and Brazilian reals. As a result, exchange rate movement directly affect BHP cash flow, operating costs and overall profitability. In 2035, BHP recorded a total non-USD currency exposure of negative US dollar 5.1 billion, with the largest exposure in AUD at negative US dollar 4.18 billion. If the Australian dollar appreciate against the US dollar, BHP profit and equity decrease with an estimated impact of around US dollar 29 million. To manage this risk, BHP used two main forecasting approach, which is the first one, fundamental forecasting, which is based on interest rate, inflation, GDP and government policy. This method is useful for long-term planning, but it is less effective in predicting short-term volatility. Second, market-based forecasting, which is rely on forward rates and future price. This approach is effective for short to medium-term hedging, although it assumes market efficiency. By combining both methods, BHP achieved balanced and effective exchange rate forecasting, helping to reduce currency risk and avoid unexpected losses and maintain investor confidence. Finally, from ethical perspective, BHP apply conservative assumption, clearly disclose currency risk and forecast uncertainty and promote transparency, corporate responsibility and good governance. Ethical forecasting protects stakeholders and strengthen BHP global reputation.
BHP is highly exposed to exchange rate fluctuations because it operates globally while reporting in US dollars. Although most of its revenue is earned in USD, a significant portion of its operating and capital costs are incurred in other currencies such as the Australian dollar, Chilean pesos, Canadian dollar and Brazilian real. As a result, challenges in exchange rate can directly affect BHP cash flows, profitability and report financial performance. There are three main types of exchange rate exposure. First, transaction exposure, where appreciation of local currency increases BHP USD denominated costs and reduce operating margins. Second, economic exposure, which affects long-term competitiveness since commodity prices are in USD but production costs are largely local. In fiscal year 2025 alone, currency movement increased operating costs by about 354 million USD. Third, translation exposure, which arises when foreign subsidiaries' financial statements are converted into USD, creating volatility in reported earnings and equity. BHP manages this risk through hedging and portfolio level controls, and importantly provides transparent disclosure in its annual report. This high level of transparency supports strong corporate governance and builds investor confidence despite ongoing currency volatility.
Hi, my name is Nurizati binti Rosmiza. Let's start with how BHP manage its exchange rate exposure. The goal is to identify and mitigate three main risks, which is transaction, translation, and economic exposure. To do this, the company uses a mix of operational tactics like strategy invoicing and netting, and also financial tools like forward contract and options. All of these require strong governance, which is constant monitoring, stress testing, and clear oversight to ensure financial resilience. Now, let's apply a realistic scenario. A 10% fall in the Australian dollar against the US dollar. We assume commodity prices and sales volume stay the same. The core effect is straightforward, which is BHP US dollar revenue now translate into more Australian dollars. Since most of BHP revenue comes from commodities sold in US dollar, a weaker AUD directly boosts reported revenue in AUD terms. This is a pure translation gain with no increase in sales but a stronger Australian dollar top line. Moving to profit, while many operating costs are in AUD, significant expenses like shipping and debt are in USD. However, Because BHP earns more USD revenue than it spends in USD costs, the net effect is positive. The gain on revenue outweighs the increased cost of USD expenses, lifting reported profit in AUD. So, what does this mean for shareholders? Positively, higher AUD earnings can support stronger dividends and capital returns. It may also boost investor confidence. However, there's a caution, which is if earnings become too volatile due to FX swings, it could raise investor concern and increase share price instability. Finally, which exposure matters most to BHP? The company faces all three types, but transaction exposure is the most critical in the short to medium term. Why? Because it directly impacts the cash flows from its core business, which is selling commodities in USD, while economic exposure is crucial long term and transaction exposure is an accounting effect. Transaction risk is where immediate financial performance is most directly at stake. That's all. Thank you.
There are several hedging strategies recommended for BHP. First is natural hedging. BHP can increase USD linked costs to reduce net USD exposure. Second is forward contracts. BHP can hedge a portion of expected net exposures progressively, then roll forward. It can also use NDFs if a currency is non-convertible. Third is cross-currency swaps. BHP can align debt servicing currency with cash flow currency. Fourth is netting and centralized treasury. BHP can use in-house bank approach where its subsidiaries hedge with Treasury and Treasury manages external hedges. Lastly, BHP can lead and lag intercompany settlements when foreign exchange is expected to worsen. When inserting contract terms, BHP should use USD invoicing for sales where possible.
In conclusion, exchange rate risk represent a major financial challenge for BHP as a multinational corporation operating across multiple currencies. The analysis identifies transaction exposure as the most significant risk given its direct and immediate impact on cash flows and profitability, while economic and translation exposures influence long-term performance and reported results. To address this risk, BHP should prioritize the use of forward contract to hedge USD cash flows, apply currency options selectively, and strengthen natural hedging strategies. Importantly, all exchange rate risk management practices must be carried out ethically with transparent disclosure and avoidance of speculation to safeguard stakeholders' trust and support sustainability long-term value creation.